All right, TTM Trades, welcome back. I'm gonna do a review on ticker SPY. So, top down approach, looking at the weekly chart, we can see that the top one standard deviation Bollinger Band is still holding on each pullback. Get a nice bounce here, run up. And then we just recently got this bounce here between last week and starting this week off here, right at that 377 range. Now, I did say in my one post where I said, hey, spot 382 to 377, very likely. We said this back on February 22nd before the drop. But I said 377 is possible if the bears show up. 377 is very important because that's the weekly's top one standard deviation. And at the same time, that was the daily's chart bottom one standard deviation, sitting right at 377. And again, in the double Bollinger Band trading strategy, we know we are in a strong uptrend as long as we hold above that middle BB and that top one standard, a Bollinger Band, as we trend upwards. Now, you will see a pullback to that middle BB every once in a while for a nice pullback for the price action to continue running up. Sometimes you may get deeper pullbacks to that bottom one standard deviation before you get a nice bounce. Now, the same is true on the opposite end for a downtrend. All right. Anytime the stock is in a strong downtrend, you will see the price action trend below the middle BB and that bottom one standard deviation Bollinger Band. All right. So, what's true for uptrend is true for a downtrend. So, what we wanted to see was we wanted to see how we reacted to that 377 to 378 price range. So, we took it down to the downside. We hit that 377 to 378 price range. Information about the bill came out over the weekend about the price action, about the Senate passing the $1.5 trillion stimulus plan, and then you get a gap up today. Now, Friday, prior to the close, we did say that 387 to 389 more upside potential intraday than downside risk. And that was on February 26th, which I believe was Thursday. Yeah, that was on Friday morning. All right. And what I thought was we was going to get this run up on Friday because as we dig deeper into the charts, we'll drop this down to the daily and drop this one down to the 5-minute chart. What I was seeing on the 5-minute chart now, and I'll zoom out. All right. This first run up here, we got a signal on the 5-minute chart when the PMO crossed over. You can see the 5-minute chart. And again, 5-minute chart, you get a lot more quicker signals. So you got to kind of be wary of those signals and where you're getting those signals at, because there's much more noise on smaller time frames. But we got this downtrend signal on the PMO, tried to get above that zero line, got rejected and started trending downwards. Took puts to the downside, and that got us that run up down here to 380. Now we've seen the price action break out of this downward trend and get back above that bottom one standard deviation and middle BB. It started consolidating sideways, and we started noticing the PMO was finding its averages and fully crossed over. So we took calls back to the upside and ran this one back up to that 391 level, which would be here. Let me mark this so we can see this a little bit better. To this 391 level right here. As you can see, we took it down, ran it back up to this 391 level. And we kind of knew we was in this consolidation period. So anytime we're playing tight consolidations, it's better to play smaller time frames, such as the 5-minute, maybe even the 30-minute. But whenever you're trending in a nice uptrend or downtrend, it's better to play more long-term signals so you could play within that trend. But for this choppiness price action, we played the 5-minute chart. So we ran it back up here to that 390 level. We started noticing the PMO was fading, showing that upside momentum. One, it was losing momentum, and two, that upside breakout was starting to consolidate as the bands begin to squeeze. Once we seen the RSI fading, then we took puts back down to the downside. All right. And then as we got back down to this level, once we got here and I started seeing the PMO crossover like this, this is when I made the call that there was more upside potential than there was downside potential, and possibly pushing that 380. What did I say? 387 to 389. All right, because I started noticing that the PMO, that downward momentum was beginning to subside, and the PMO was starting to trend sideways, and it was near that bottom one standard deviation line of support. So we did take puts right in this area. Okay. As the price action dipped down like this, no, that's 1055. It was a stronger dip. Yeah, matter of fact, it was this dip right here. So as the price action began to dip down, I closed my position out because I figured maybe the PMO would get rejected and we would, push further downward because that's what I marked on the chart. I started noticing that the PMO was crossing over um, first thing that morning at market open at 9:30. So started crossing over first thing that morning. Continued to dip downward. I closed out my position. PMO fully crossed over. I was done trading for the day. I didn't really want to chase the choppiness of this price action. And then you see this end of day sell off right here, where it looked like a lot of people sold out of their positions before market closed over the weekend due to them knowing that the stimulus bill was probably going to get passed. Well, a lot of people just didn't want to play with that news. So a lot of people closed out their positions prior to market close. That sell off did not take the PMO any further down. It stayed pretty flat. So it was nothing that really affected the momentum of the stock, kind of bottoming out at this level of 380 to 378, which was the level we was looking for. Like we originally called, we wanted to see what we do with that 378, 377 to 378 range, as we talked about in our past previous posts. So it hit that 377 to 378 perfectly and bounced off of it and held. Stimulus bill got passed, and then we got this nice breakout with the PMO continuing above its averages. Nice move breakout to the upside. Now looking at the 5-minute chart, the reason why we said 387 to 389, if I bring up the 2-hour chart here on my right side, at the time we had that 390. Hold on, maybe it was the 30-minute chart I was looking at. Yeah, so we had 387 sitting here, right where the top one standard deviation Bollinger Band was at. So I didn't think we would get above that. And then we had the 389 sitting right where the 150 SMA is on the 30-minute chart. So we're trading smaller time frames here, 5 minute, 30 minutes, so some much quicker signals. But you can see the chart was bottoming out on the 30-minute chart, hence all this movement on the 5-minute chart here on your left-hand side. But bottom out on the 30-minute chart, and we called 387 to 389 for a potential breakout to the upside. And we got that breakout to the upside where we pushed even all the way up to 390, close to 391. Now, does this mean that ticker S&P or the SPY has bottomed out? All right. I would say that we are not out of the weeds yet. All right. So just looking at the daily, we did hit that 378 perfect. And then we rallied back to the upside. Now you still have this top one standard deviation that's sitting here. All right. What would make me a believer is if we get back above this 390 level and close above it on some solid volume. If we get back above this 390 to 391 level sometime throughout the week and close above it on solid volume, then this would set the chart up to break back out to the upside for a possible 400 push, which is what everyone's looking for. Now we can see that on the 2-hour chart, this 150 SMA has been holding on each pullback, and it's held this go round too. All right, but again, the same thing. If you look last time, even though we had this rally, you can see it is a lower high. Okay, you got a high here, dip, lower high, dip, lower high, another strong dip, lower high, another strong dip, lower high. So you're still creating lower lows and lower highs on the intraday chart as far as the 2-hour chart. And that PMO is still turned downwards. Although still in bull territory above that zero line, is still turned downwards to show that the momentum hasn't fully increased intraday to flatten out the PMO and kind of prepared to get another nice clean crossover back to the upside. So moving into tomorrow, what I'm kind of looking to see happen is again at 390 to 391, where both the top one standard deviation sitting at on the 2-hour and daily chart. I'm looking for us to get rejected and then pull back. All right, now key levels we want to see hold is that 388, right where that middle middle BB is sitting at on the 2-hour chart right here at 388 and then 384. All right, 388 and 384 are the key areas of support. All right, now if we lose 388, that's fine. 384 is sitting just below. We lose 384, then that will put the 2-hour chart back to a setup to go into a downtrend. So just like you seen this run up here happen on the 2-hour chart, the PMO tried to adjust to it, but it wasn't enough momentum to get it to fully cross. So then we sold off again. Now here you get another run up. PMO tries to cross over and moving into tomorrow. I'm pretty sure that this 391 is going to act as resistance, and the 2-hour chart is going to pull back again, which would possibly push the PMO down a little bit further to see if we get below this zero line to put us in bear territory. So we're still in a pretty neutral position as far as if we're going to be in an intraday uptrend or intraday downtrend. We're still in this consolidation window with 384 as the key line of support and 391 is the key line of resistance. So based on how you're playing, if you're looking to go long, I would look to lock in as close as 384 as possible. And if you're looking to go short, I would try to lock in as close to that 391 resistance as possible. Now, one thing to pay attention to is I normally get my early signals from the RSI. All right, just like we had this breakout here on the RSI. Here we'll slide the 2-hour chart over here to the right, 30-minute chart over here to the left. All right, so just like we got this run up here, looking on the right-hand side on the RSI, when we pull back down to this 40 area, which is extreme level of oversold on the RSI for how I have it set up. When we pull back into this 40 area, I was looking for a crossover. So rejected, another deep pullback, and then we broke above. All right. So once we got back above the averages, which was right here in that 382 window, that was a good time that was a great early signal with the PMO crossover as confirmation to lock in calls and take that 382 up to that 393 range. So, what you are seeing here is if you look at the RSI, it was constantly running down, getting rejected by its averages to show that momentum to the downside was strong. Tried to get a rally here, rejected. You pulled down back into this 40 area, which is a pretty deep pullback and a nice strong area of support in reference to the RSI. And then you get this rally here and you break above the averages. So again, as we pull back tomorrow throughout the week, that 388 to 384, depending on which one we find as a line of support, if that RSI begins to curve down and find support here on his long-term average or short-term average and then get a bounce off of it, that would possibly be my confirmation that we're probably going to go back into a uptrend to test that 400 area. All right. And then the same thing here with the 30-minute chart. That PMO has been trending downwards to show that momentum to the downside. Even rallied here to get back above both its averages and the zero line, rejection. And now if you look here, another full crossover to get back above that zero line and is now both back above both its averages. So if we see a light pullback again, like we talked about, 387 to 384, with some very light volume to show that the selling has kind of waned, faded away. You get a nice bounce to the upside. That would continue the 30-minute charts PMO to the upside, which will increase that momentum on the 2-hour chart to possibly cross over and start this crossover back to the upside. So we'll just keep an eye on it. We're kind of in neutral territory. Again, 391 resistance, 384 a strong line of support. Keep that in mind as you choose which side to play. TTM Trades, I'm out.